Europe has long relied on Russia for its energy needs. Russia supplied 40% of Europe's natural gas. For Germany, this dependence was even higher at 55%. This reliance became a problem in 2022. Russia invaded Ukraine. The West responded with sanctions against Russia. Europe faced an energy crisis. The crisis threatened Europe's economy and its energy security. European countries scrambled to find alternative sources of energy. They needed to heat homes and power industries. The situation was dire and a solution was urgently needed. The United States stepped in to help. In the face of a growing energy crisis in Europe, the US saw an opportunity to support its allies while also benefiting economically. The move was strategic, aiming to stabilize the energy market and provide immediate relief to European nations struggling with energy shortages. The US increased its exports of liquefied natural gas, or LNG, to Europe. This was a significant shift, as the US had to ramp up its production and logistics to meet the new demand. The infrastructure for LNG export was expanded rapidly, with new terminals and shipping routes established to ensure a steady flow of gas across the Atlantic. In 2023, US LNG exports to Europe surged by over 50%. This dramatic increase was a testament to the US's capability to adapt and respond to global needs. European countries facing a harsh winter and dwindling energy supplies welcomed the influx of LNG, which helped to keep homes warm and industries running. This provided some relief to the energy crisis. The additional LNG supplies helped to stabilize energy prices and reduce the immediate pressure on European energy grids. However, the relief was short-lived, as the underlying issues of energy dependency and supply chain vulnerabilities remained unaddressed. However, it was a temporary solution. The reliance on US LNG was not sustainable in the long term. European leaders knew that they needed to find more permanent and reliable sources of energy to avoid future crises. The ticking clock symbolized the urgency of the situation, as temporary measures could only hold off the inevitable for so long. The US approach to trade is often unpredictable. While the current administration was supportive of LNG exports, future policies could change. Trade negotiations are complex and can be influenced by a myriad of factors, including political shifts, economic pressures, and international relations. The America First policy prioritizes American interests. This policy, championed by former President Donald Trump, emphasized the need to put American economic and security interests above all else. While this approach can benefit the US domestically, it can create uncertainties for international partners who rely on stable and predictable trade relations. This can lead to sudden changes in trade policies. Shifts in administration or changes in political priorities can result in abrupt policy changes, affecting international agreements and trade flows. European countries therefore face the risk of sudden disruptions in their energy supplies if US policies were to change unexpectedly. The potential return of Donald Trump to the White House in 2025 raises concerns. His previous tenure saw significant changes in trade policies, and a return could mean a reversion to more protectionist measures. European leaders are wary of this possibility, as it could impact the stability of their energy imports from the US. Trump's policies could make US LNG exports more expensive and unreliable. Increased tariffs, stricter trade regulations, and a focus on domestic energy needs could drive up costs and reduce the availability of LNG for export. This would exacerbate the energy crisis in Europe, making it imperative for European nations to seek alternative solutions. Europe needs a long-term solution. The continent must invest in renewable energy sources and diversify its energy portfolio to reduce dependency on any single supplier. Collaborative efforts among European nations and with other global partners are essential to build a resilient and sustainable energy infrastructure. It needs a reliable energy partner. Building strong, dependable partnerships with countries that have stable and predictable energy policies will be crucial. Europe must look beyond temporary fixes and work towards a future where energy security is guaranteed through innovation, cooperation, and strategic planning. Canada presents itself as an ideal energy partner for Europe. Canada has vast reserves of oil and natural gas. It is a stable and predictable country. Canada has a long history of reliable trade relations with Europe. In 2017, Canada and the European Union signed the Comprehensive Economic and Trade Agreement, or CETA. CETA eliminates almost all tariffs between Canada and the EU. It creates a level playing field for businesses on both sides of the Atlantic. CETA strengthens the economic relationship between Canada and Europe. The impact of CETA is evident in the trade figures. Since its implementation, trade between Canada and the EU has increased significantly. Bilateral trade has grown by 66%. Canadian exports to Europe have surged by over 46%. CETA is more than just a trade deal, it is a symbol of the strong partnership between Canada and the EU. It demonstrates Canada's commitment to free trade and open markets. It provides a framework for continued economic cooperation and growth. Canada's pivot-less reliance on the US. Historically, Canada has been heavily reliant on the United States for trade. In 2023, 90% of Canada's $43 billion in crude oil exports went to the US. However, Canada is actively seeking to diversify its trade partners. It aims to reduce its dependence on the US market. In 2018, Canada launched a diversification strategy. It aims to increase its trade with countries outside the US by 50% by 2025. This strategy focuses on expanding trade relationships with Europe and Asia. Canada is looking to tap into new markets for its energy resources. US trade policies, a catalyst for change. Recent US trade policies have further accelerated Canada's diversification efforts. The US imposed tariffs on Canadian steel and aluminum. This added about 10% to the cost of exporting Canadian natural gas. These tariffs have made it more expensive for Canada to sell its energy to the US. As a result, Canada is redirecting its LNG exports to the European Union. This benefits both Canada and Europe. Canada gains access to a new market for its energy resources. Europe secures a reliable and affordable source of LNG. A new energy landscape. Canada's rise in LNG. Canada is investing heavily in its energy infrastructure to support its export ambitions. This investment is not just about building new facilities but also about upgrading and expanding existing ones. The country aims to position itself as a global leader in the energy sector, leveraging its vast natural resources to meet growing international demand. Two major projects stand out: LNG Canada and the Trans Mountain Pipeline expansion. These projects are pivotal to Canada's strategy, representing significant advancements in both natural gas and crude oil export capabilities. LNG Canada, located in British Columbia, is a massive LNG export facility. This project is a joint venture involving several major energy companies, highlighting the collaborative effort to boost Canada's LNG export capacity. It is scheduled to begin operations in 2025. The timeline is ambitious, but the progress so far has been promising, with construction milestones being met on schedule. The facility will have an initial export capacity of 1.8 billion cubic feet per day. This capacity is expected to meet a significant portion of the global demand for LNG, providing a reliable source of energy for international markets. This capacity has the potential to double in the future. Plans are already in place to expand the facility's capabilities, ensuring that Canada can continue to grow its presence in the global LNG market. The Trans Mountain Pipeline expansion will triple Canada's crude oil export capacity to the West Coast. This project is crucial for diversifying Canada's oil export routes, reducing reliance on the United States as the primary market. This will allow Canada to ship more oil to Europe and Asia. By opening new markets, Canada aims to enhance its energy security and economic stability, ensuring that its energy sector remains robust and competitive on the global stage. A new global order. Canada and the EU forge a path. In an era marked by rapid change and unprecedented challenges, Canada and the European Union are stepping up to shape a new global order. Their collaboration is not just a strategic move, but a necessity in today's interconnected world. The evolving energy landscape is creating new alliances and partnerships. As the world shifts towards renewable energy, Canada and the EU are leading the charge. They are investing heavily in wind, solar, and other sustainable energy sources, while also managing the transition from traditional oil and gas industries. Canada and the European Union are strengthening their ties. This partnership is built on shared values and mutual interests, aiming to foster economic growth, environmental sustainability, and social progress. Leaders from both sides are committed to working together on a range of issues, from trade to climate change. They are working together to secure their energy future. By pooling their resources and expertise, Canada and the EU are developing innovative solutions to ensure energy security and sustainability. This collaboration is setting a benchmark for international cooperation in the energy sector. They are moving away from their traditional reliance on the United States. This shift is not just about diversifying their economic partnerships, but also about asserting their independence on the global stage. By strengthening their trade routes and economic ties, Canada and the EU are paving the way for a more balanced global economy. This shift reflects a broader trend in global affairs. Countries around the world are re-evaluating their alliances and partnerships, seeking to build more resilient and diversified economic networks. The collaboration between Canada and the EU is a prime example of this trend. The world is becoming increasingly multipolar. Power is no longer concentrated in the hands of a few nations. Instead, multiple countries and regions are emerging as influential players on the global stage. This multipolarity is reshaping international relations and creating new opportunities for collaboration. The US is no longer the sole superpower. While it remains a significant global player, other nations are rising to prominence. This shift is leading to a more balanced distribution of power and influence, encouraging a more cooperative and inclusive approach to global governance. Other countries and regions are asserting their influence. Emerging economies are playing a crucial role in this new global order, bringing fresh perspectives and innovative solutions to the table. Their contributions are vital for addressing the complex challenges of the 21st century. Canada and the EU are at the forefront of this new world order. Their proactive approach to collaboration and innovation is setting a standard for others to follow. By working together, they are not only advancing their own interests but also contributing to global stability and prosperity. They are building a more sustainable, equitable, and prosperous future for their citizens. Through their joint efforts, Canada and the EU are demonstrating that international cooperation can lead to positive outcomes for all. Their vision for a better world is inspiring others to join in the effort to create a brighter future for everyone.